Hogan is with me. He is the chief strategist for National Securities now. Art, so, well, what's gone wrong here? What's gone wrong?
Well, you know what's interesting here, and a couple things. So in the general market, I would offer up that we're getting to a place where we're very oversold. So if you look at just this year and what we've seen in terms of damage, the Nasdaq's off 10% from its all-time high, was just set in December. But if you look underneath the hood and say, okay, well, what's the average stock doing? The average stock in that composite index that has about 3,600 names is down about 40%. So we've done a lot of damage in a short period of time, and it's not just the first 2.5 weeks of 2022. It's the better part of the month of December as well, right when the Fed made its pivot, dropped transitory, and started talking about hiking rates and tapering their asset purchases. We've seen a lot of multiple compression in those fast growth technology companies, and clearly that seems to continue. And every once in a while in these multiple compression periods, we have these short-term bounces, and we got one of those today, a pretty significant bounce from the opening till about a half an hour ago, to your point, and now we seem to be rolling over into the close. We'll see what the next 45 minutes brings.
There's really, I mean, Peloton aside, there really is only one question that investors ask at the moment. We know these higher interest rates are coming throughout the course of the year, but is this a buy on the dips moment? Is this a sit and wait it out for clarity, or is this a run for the hills?
Yeah, and I think it's much more of the former than the latter. And I will tell you, I think the reason I say this is if we go back over the last 30 years and look at 4 distinct rate hike cycles, the two things that have happened is that during that rate hike cycle, especially initial parts of that, the market has actually done better. And surprisingly, when we look at the price action in different sectors right now, the sector that's done distinctively well in those 4 rate hike cycles has been technology. The problem is it's the anticipation of this. This is all the action you get before the actual first rate hike, which will likely happen in March. And also coupled with all that anticipation is everyone in the street seems to be wanting to run around with their hair on fire and saying it's not going to be 25 basis points, it's going to be 50 basis points in March. And oh, by the way, they're not going to raise 3 times, they're going to raise 4 or 5 times. I think that's getting far in front of what a very transparent Fed has told us. They've got 3 rate hikes scheduled for 2022. The first one likely happens in March. They'll likely be 25 basis points. And oh, by the way, that likely isn't going to be a detriment for markets, but this is just a change. It's a massive change in our understanding of monetary policy, the way we've seen it over the, since 2018 and 2019. So
is the I say a long term, forgive me, it's a misnomer, is the medium term, is this year, is there something smelly at the back of the fridge that we need to be concerned about that's going to bring the whole thing crashing down?
Yeah, it's such a great question, and the market certainly acts like that's the case. I would argue that we are likely to have above mean GDP growth, and that's for the entirety of 2022. We're likely to have low double-digit earnings for the S&P 500. Away from that, we'll likely have rising rates and probably have an average of 1 3/4 or 2% yield on the U.S. 10-year for the entirety of the year. None of those things, to me, really spell out a disaster for the market. In a rate hiking cycle, you typically do half as well as you did the year before you had a rate hiking cycle in the S&P. So that would mean with a 28% return in the S&P 500 last year, we likely will have high single digits or low double digit returns in the S&P 500 for 2022. So I don't think there's some cabbage that's spoiled in the back of that fridge that is somehow going to tip over the apple cart and propel us into a bear market. We're not going into a recession, and I don't think we're going into a bear market either.
Art Hogan, very glad we had you on the program tonight. I'm grateful, sir. Thank you.